Mortgage. Most people understand they need to talk to someone who lends money. They think of their bank, maybe a credit union. They know they need a lender. But what many people don't realize, and what is absolutely critical to understand, is that there's a fundamental difference in who you talk to within the lending world. You could go directly to a single bank or lender, walking into a branch or calling their main line, and talk to one of their loan officers. Or, and this is the path we're going to explore in depth today, you could choose to work with an independent mortgage broker. And let me tell you, choosing the right path here can literally make the difference between a stressful, costly experience and a smooth, efficient one that saves you thousands, potentially tens of thousands of dollars over the life of your loan, not to mention countless hours of your valuable time and a significant amount of stress. It can truly set you up for long-term financial success in your home ownership journey. Today, we're diving deep into exactly why working with a mortgage broker is not just a good idea, something to consider, but often the absolute best idea for home buyers, whether you're buying your very first starter home or your fifth investment property. We're going to meticulously break down what a mortgage broker actually does, how our role fundamentally differs from going straight to a single bank or direct lender, and the concrete, tangible, real-world benefits that working with a broker can bring to your home buying experience, making it smoother, more affordable, and ultimately more successful. By the end of this video, you will have a crystal clear understanding of why having an experienced, expert advocate in your corner, someone whose primary focus is on finding the best loan for you from the entire market, is absolutely invaluable. All right, let's really set the stage and understand the landscape. You've found the perfect house, or maybe you're just starting the exciting process of looking and getting your finances in order. The next, and often most complex big hurdle, is figuring out how to finance this significant purchase. Getting a mortgage is not a simple transaction like buying a car, where you might negotiate a price and sign a few papers, or applying for a credit card with a straightforward application. It is a sophisticated financial product with a multitude of variables that interact in complex ways. Then you have the different loan programs themselves. Conventional loans, which are not backed by a government agency. FHA loans, insured by the Federal Housing Administration, often popular for first-time buyers due to lower down payment requirements. VA loans, guaranteed by the Department of Veterans Affairs for eligible service members and veterans, offering significant benefits like no down payment. And USDA loans for eligible rural home buyers, also often requiring no down payment. Beyond the program type, you have different terms: the faster wealth-building 15-year fixed-rate mortgage and adjustable rate mortgages, where the interest rate can change over time based on market conditions. You also have decisions about escrow accounts for taxes and insurance, private mortgage insurance if your down payment is less than 20% on a conventional loan, and understanding how your credit score and debt-to-income ratio impact your eligibility, and the terms you're offered. Navigating this incredibly detailed and often confusing landscape on your own can feel, as I said, like trying to find your way through that dense forest without any guidance. You might walk into your local bank, sit down with a loan officer, and they will offer you the products that their bank provides. They might have a few options, perhaps a standard 30-year fixed, maybe a 15-year, and perhaps an adjustable rate. They will quote you their bank's rates based on their current pricing sheet and their bank's specific underwriting guidelines. That's their universe of options for you. It's like walking into a single retail store hoping they have exactly what you need in your size and preferred color at the best possible price, without knowing what other stores might offer. You are limited to the inventory and pricing of that one establishment. This is where the fundamental, game-changing difference between a direct lender, like going straight to the bank where you have your checking account, or a large online lender that only offers their own products, and an independent mortgage broker comes into play. A direct lender works solely for that one specific financial institution. Their job is to originate loans for their bank. They have a specific set of products approved by their bank, specific rates they are authorized to offer you based on their bank's internal pricing and guidelines, and their primary goal, understandably, is to sell you their bank's products. Their loyalty and obligation are to their employer, the bank. A mortgage broker, on the other hand, is an independent professional. We are licensed and regulated, but we do not work for any single bank or lending institution. Think of us not as a single store, but as your personal mortgage shopper who has access to an entire shopping mall or a vast marketplace of lenders. We have established relationships and partnerships with dozens, sometimes even hundreds, of different lenders across the country. This network includes big national banks you've heard of, smaller regional banks that might have specific local programs, credit unions that sometimes offer unique terms to their members, and even specialized mortgage companies that focus on particular types of loans or borrowers. Our job, our core function, is to first take the time to truly understand your unique financial situation, your specific goals for home ownership, and your individual needs. We delve into your income, your debts, your credit history, your savings for a down payment and closing costs, and your long-term financial aspirations. Once we have a comprehensive picture of your situation, we then go out into that vast marketplace of lenders that we work with to find the loan options that are the absolute best fit for you. We compare interest rates, loan terms, fees, closing costs, and program guidelines across multiple lenders simultaneously, so you don't have to spend weeks or months doing it yourself. So, let's break down the concrete, tangible, and significant, and benefits of choosing the mortgage broker path when you're ready to buy a home. These aren't just theoretical advantages. These are real-world benefits that can directly impact your finances and your experience. Benefit number 1. Access to more options and better rates. This is arguably the most compelling and significant advantage of working with a mortgage broker. When you go to one bank, you are limited to the products and rates that one specific institution offers at that moment. Their loan officer can only show you what's on their menu. That's it. When you work with a broker, you are instantly gaining access to a huge network of potential lenders. We have the ability to submit your loan application to multiple lenders in our network. This creates a competitive environment. These lenders are competing for your business, and that competition often translates directly into lower interest rates, lower fees, and better overall loan terms for you, the borrower. We have access to wholesale rates, which are often more competitive than the retail rates that a direct lender offers to the general public walking in off the street. It's about finding the lowest rate and best terms that you actually qualify for based on your specific financial profile, and doing it efficiently and effectively. Let's put this into a practical perspective with numbers. Imagine you're buying a house for $300,000 and planning to take out a $250,000 mortgage. On a standard 30-year fixed-rate loan, even a seemingly small difference in the interest rate can add up to substantial savings over 3 decades. If one direct lender offers you an interest rate of 7.0% and a mortgage broker, by shopping their network, finds you a loan at 6.75%, that 0.25% difference might only change your monthly payment by around $50 initially. However, over the full 30-year term of the loan, that seemingly small difference could save you well over $15,000 in total interest paid. And often, the difference a skilled broker can find is even greater than that, potentially saving you tens of thousands of dollars over the life of the loan. My clients frequently share their experiences after comparing offers, telling me that the rates and terms I was able to secure for them were far below other sources they had checked, including their own banks or other direct lenders they contacted. This isn't just a happy coincidence or luck. That's the direct result of the power of having someone who can shop the entire market for you, someone who understands the nuances of each lender's pricing structure, their appetite for different types of loans, and how they view different borrower profiles. This expertise allows us to strategically place your loan with the lender in our network, most likely to offer the most favorable terms for your specific situation. This expertise in matching borrowers to the right lenders is a key differentiator and a major source of tangible savings for you. Furthermore, we are constantly monitoring market conditions and the ever-changing offerings from our network of lenders. Interest rates fluctuate daily, sometimes even hourly. What was the best offer yesterday might not be the best offer today. A broker stays on top of these fluctuations for you, ensuring we are presenting you with the most up-to-date and competitive options available at the time you are ready to lock your rate. This proactive approach to rate shopping and market awareness is something you simply cannot replicate effectively by calling a few banks yourself. It requires dedicated time, access to lender portals, and an understanding of market trends. All things a broker provides as part of their service. Benefit number 2. Personalized guidance, tailored to you. As I mentioned, every home buyer's financial situation is unique. Like a fingerprint, you have different income streams. Maybe you're a W-2 employee, self-employed, a freelancer, or have multiple sources of income. You have different levels of existing debt, from student loans and car payments to credit card balances. Your credit history is your own, with its own unique story. Your savings for a down payment and closing costs will vary. And perhaps most importantly, your long-term financial goals and life plans. Are you planning to stay in this home for 5 years or 30? Do you anticipate your income increasing significantly in the coming years, allowing you to potentially pay off your mortgage faster? Or consider a shorter loan term? Are you planning to start a family, which might impact your future budget? A good mortgage broker takes the time, real time, to truly understand all of these individual factors. We don't just ask for your basic financial information and plug your numbers into a generic system that spits out a limited set of options. We engage in a detailed consultation to understand your complete financial picture and your aspirations. We discuss your current budget, your comfort level with monthly payments, and your long-term wealth-building goals. We help you understand how different loan options align with your specific needs and goals. We can model various scenarios for you, showing you the impact of different down payment amounts on your monthly payment and whether or not you'll need private mortgage insurance, illustrating the difference in total interest paid and monthly payment between a 15-year and a 30-year mortgage, and explaining the implications of choosing a fixed rate versus an adjustable rate mortgage, given the current interest rate environment and your tolerance for risk. We show you the real impact of these choices on your monthly payment, your overall cost of borrowing over the life of the loan, and how the mortgage fits into your broader long-term financial picture. It's about finding the right mortgage that supports your life and your financial future, not just any mortgage that you happen to qualify for at one specific institution. A direct lender, bound by their bank's product offerings and sales goals, might inadvertently or intentionally push you towards the products their bank is prioritizing, even if it's not the absolute best, most cost-effective, or most suitable fit for you. A broker's loyalty